away their money from here, then definitely we're going to see a continuous trend as we be, and even the market tending towards 40,000 basis points.
40,000 basis points. So, well, you remember what I keep telling you, because every time you set a new high for the all-share index, I usually don't argue with you because I've seen that consistently come true. So 40,000 points, yes, I'll keep that on the table for now. But for today's trade, what can we expect? Are we going to see more profit taking? Well, we can adjust a day away, and perhaps investors might be thinking about putting some extra cash in their pockets.
Yes, we may see some profit taking today, but not because a lot of people, some are not real investors. Some are just share speculators, and we have a lot of them around this time around. And if that is the case, some may want to sell some of those stocks that actually lost yesterday. And for that reason, there may just be a little drop in the market, but not as substantial as what we saw yesterday. We won't see that happening in a little while to come again.
All right, thank you so much, Rotimi, for sharing your thoughts with us, giving us your own perspective on market trading yesterday and going forward for today. Well, he has also said he's on New Year high for the market. 40,000 points is what Rotimi said we should or can be looking forward to concerning the all-share index. Well, that's been our Eye on the Capital Market segment in association with Guaranty Trust Bank. Welcome back. Well, we're still focusing on the Nigerian equities market, looking at those sectors that have returned so much to investors, why investors are obsessed with some particular stocks. I'm being joined now in the studio by a financial analyst, or a research analyst rather, at Morgan Capital, Chuks Ayaun. Thank you so much, Chuks, for being here.
Thanks for having me.
I've been looking at, I'm sure you've also been monitoring this rally. You heard Rotimi, he talked about the activities of speculators, talked about a New Year high, 40,000 points for the all-share index. I mean, 3-4 months ago, I certainly would have put up a very strong argument against that. But, what we're saying is just, one New Year high after another, although we've seen some profit-taking spells. But for you, what has been the highlight of this rally?
Well, to be fair on the investors, the regulators and everybody who has a part to play in ensuring that the market is stable, I think they're beginning to get it right. I think investor confidence is getting higher. I think people are beginning to see and believe the companies when they talk with respect to their numbers. And so I think this rally is expected because we are getting it right anyway. So I think institutional investors are significant players in this market. And with the sophistication they bring to the market with respect to their research and all those, I think we will continue to see this rally to be sustainable going forward.
Now, I'm sure you're also aware that we are gradually or slowly moving close to that 2008 peak that we saw just before the market crashed. I keep talking about that because it's amazing to see how very much closer we're getting on it, almost on a weekly basis. 13.3 or 5 trillion for the market capitalization back then. Although the all-share index is still quite far from that, around over 60,000 points. We're still at 36,000 points. But for the market capitalization, yes, we are moving so much closer. But then before we got here, sometime early 2012, I spoke to many analysts, and they did say that well, back then it was artificial. Many of the stocks were overpriced, and that we might not find ourselves in a situation where we get so close, but we've come so close, and we've seen that the fundamentals, all that's driving the rally, are actually strong, and something we can trust and believe this time around. So, what are your thoughts on that? The fact that yes, some believe that it was perhaps artificial back then, but now we're seeing strong fundamentals, and who knows, we might even surpass that.
The truth is, I think the 2008. Bull run was artificial, like everybody knows. I also think that the fact that we have institutional investors with their sophistication, like I pointed out earlier, doing proper research and looking at these companies for what they are worth, would bring stability different from what we had in 2008 or pre-2008. Because then we just had the banks coming to the market, and we had so many people coming into the market, not really understanding what the market was all about. So I think right now it's more systematic, it's deliberate. We see the all-share index rising because most of the market is made up largely of institutional investors right now, and the value of the stock they are looking at going forward. They have a long-term view to these companies. Unlike what we had then, we had people who were largely short-term players in the market. So we have people right now taking positions for long-term outlook on the market. So
I'm sure you heard Rotimi say that the speculators, short-term speculators, are still very much in the market. But do you think how much of an impact do you think they could make this time around? We've actually seen some impact, though. You know, those profit-taking spells that we see, and for sometime between March and April, we did see a prolonged spell of a bearish run. But how much of an impact do you think going forward that this set of people could have?
The market is always will always have people who have short-term view to the market. You know, so you can't take those people away from the market. They make it what it is. You know, but the truth is, at the moment, I think we have more pension funds, more foreign portfolio managers in this market, and I think because of their outlook to the market, because they have longer term, we would see the impact of small short-term players in the market from now, every now and then. But the truth
it's
is,
nothing to worry about. It's nothing to.
I really think,
of any kind
I really think the fundamentals of the market currently are strong.
And let's talk about some of the stocks, the sectors that investors seem to be obsessed with, whether institutional or foreign. They've usually been the bellwethers, the blue chips, the Dangotes, Nigerian breweries, Guinness, Nestle, now recently Cadbury. But you know, those stocks that you just see them on a daily basis, either on the laggards list or on the best performers list. So it would seem that these classes of stocks or even sectors seem to be enjoying so much patronage from investors. And remember, we still have the ASM, the Alternative Securities Market. I know the authorities are trying to give those stocks visibility so investors can also invest in these stocks, and perhaps we could see more balanced rise, they say, in the markets, as it were.
Anyway, I think the truth is, I think the institutional investors would focus a lot more on fundamentally sound stocks. We're looking at Dangote Cement, and the truth is, most of them currently have potentials for growth. So they are not just defensive stocks. They are not just stocks that you will buy and not expect too much growth. Look at Dangote, for instance. We've seen some massive returns both on top line and bottom line. So
do you think investors are tracking what? Because on the sidelines we hear news about what the company is doing, investing in this, investing in that, trying to expand here and there. So those are the things, those are the news that investors look out for.
Exactly.
Okay, this company going forward.
Going forward, these companies are looking at growing market size, and institutional investors are interested in that because they are not just looking at for the now, they are looking at 4 years from now. And if you look at Zenith Bank, for instance, in 2012, it was trading at about 15, 16, and we're in May 2013, and we're looking at Zenith Bank trading at about 22. 22
now, 10 so yesterday.
I think we're breaking new frontiers as far as the market pricing with these stocks are concerned. I think it is driven by fundamentals. There is value in this market.
And let's talk about specifically now banks. They've always been in the forefront of any rally that we see at the market. Apart from rallying in terms of volume, also every day, every week. Look at the weekly volume, over 70%, almost on a weekly, consistently on a weekly basis. That usually comes from the financial services sector, particularly the banks. And I'm looking at the list of the bank stocks, and many investors say that this is where the growth will come from. This is the focus will go back to these banks, as we've seen. And I'm looking at the pricing of some of these banks. Guarantee Trust Bank, still the highest price so far, 28 naira 80 kobo. Now, there was a time when we saw the first bank, 36, 46 naira, very highly priced. Looking at that, also on the back of the way the all-share index and the market capitalization have been appreciating, would we see this bank stocks going back to those highs that they were when the market, when we saw that market boom, as it were?
Esther, when I started out talking about this market, I said the regulators are beginning to get it right. You see banks' asset quality improving. You see the fact that they now report using the IFRS system of accounting reporting. It just goes to show you that people now believe the numbers, unlike what we had previously. We just had banks who people really didn't understand how they made their money. A lot of people just felt they were being big. You had bank branches everywhere, so on that merit, they would just go and buy the shares. But the truth is, right now, we have seen them justify the ratings and the expectations. So I think there is value in the banks. They would continue to justify new frontiers that they are breaking because there is more believability in their numbers.
Now let's talk about what could also sustain the market in the absence of earnings, because we know that in the last 2-3 months we had a